Okay, yeah, once again, it's a pleasure to be here today to discuss this great important subject, building generational wealth through the financial markets. And I do believe that we are going to have a wonderful time together. All I need you to do is to sit back, relax, and get the best out of this training because this is an opportunity of a lifetime. Let me start by saying that anything that does not have a structure does not have a future. It's a quote by one of my mentors. So, structure is what determines the future of anything. And so, like we are talking about building generational wealth through financial markets. One of the ways to build generational wealth is through compounding, and that is what I'll be talking on today. Compounding. You must have heard about what is called compound interest. That is one of the ways through which the billionaires, the rich, made wealth. And so we are exploring that through the financial market. Uh, Also recognize that there are three types of vehicles in the financial market. We have the money market, which are the bank instruments such as savings, current accounts, fixed deposit account, treasury bills, etc. Then we have capital markets such as stocks, mutual fund, government bonds, equity market. Then we have forex market, which is trading currencies of nations. I know a lot of people are confused when it comes to forex. People see it as something that is complicated, something that is difficult. But well, the good news is this: I'm here to let you know that forex is not difficult. Is, as a matter of fact, it's one of the simplest thing you can do for yourself. So we'll be taking a journey through the forex market. Like I said, forex is trading currencies of nations. Simple. You are buying the currency or you are either selling the currency. So whichever way you want to do. So every economy has their own currency. Every country have their own currencies, and that is what determines the strength of their economy. It's a reflection of what goes on in that country. So, for instance, if I mention USD or dollar, you already know how strong the country is going to be. If I mention Great Britain pound, you already know how strong that nation is. And so that's what we are doing. So in forex, so if the economy is good, then definitely it means that their currency is going to be good and very important, and vice versa. If the economy is weak, then the currency will be weak. So understand also that there are categories of currency in the forex markets. We have major currency. Anything that is paired with dollar is what we call major currency. So such as USD/JPY, you can see dollar there. Any dollar pair is what we call major currency. They are called major currency because of volatility, because of movement, because of participation, market participant. People patronize such market when it has to do with that. So I always recommend that people trade major currency. Anything that has dollar pair, the movement, you can make good profit. The volatility is always there. So we can take advantage of that. And so then we also have the minor currency, anything that does not have dollar in it. For instance, maybe you pair Great Britain pound with Japanese yen. When you pair them together, so that is, we are talking about minor currency. Then we also have exotic currency. People don't always trade that. So you can limit yourself between major and minor currency. So somebody may be asking, how then do I trade the forex market? Very simple. Number one, you need knowledge. You need knowledge, very important. You need knowledge. So if you want to earn from this market, you must be ready to learn. And very important. Just unfortunate that most people don't want to learn, but they want to earn. You can't. It can't work. I won't deceive you. And number two is you need a brokerage platform. You need a brokerage platform to take advantage of. That means you must sign up with a broker who will give you such leverage in order to be able to do that. So going to our greater subject today, how then do I compound my forex trading account? Because that's very important. How do I compound my forex trading account, because with even as little as $100, you can compound it to a very big amount. And that is the strategy I want to share quickly with us. And how do we do that? Like I said, very important, you need knowledge. And that's why we are here to also learn together. So to compound your trading account, also recognize that you must have an account. Very important, you must have an account. Open an account with a broker, either demo account or real account. So that means we have two types of account: real account, the one you can make withdrawals from, and then we have the demo account. So, and then you also need MetaTrader 4 or 5, which is a platform whereby you trade. That is where you analyze the market. That is where you place a trade in the market, any instrument you want to buy. So, the next is that you need capital, because there must be something you are compounding. No matter how small the capital is, there must be capital. If it's $100, $1,000, so whatever it is, so you can compound that. And then you need to know your risk. How much are you willing to risk? It's impossible for you to trade without taking risk. Everything in life is risk. So you have to understand your risk. Then how much profits are you looking at? For instance, you want to have 100% profit. If that is your target, then we can now structure how to be able to go about that. So you must know when to trade. That's part of the knowledge. You must know when to trade. You must know what type of asset you want to trade. Is it currency you want to trade? Is it commodity? Is it indices? But I will advise that you stick to currency. Yeah, currency is, you can minimize your risk with currency. Then you need good capital, like I said, very important to start with. And then also understand that you need to understand the nature, your own nature. Are you a day trader? Because we have different types of trader. So you have to look at your work schedule, look at your lifestyle, which one fits you. Very important. Look at your nature or personality. Are you a day trader? Are you a position trader? Are you a scalper or a swing trader? So a position trader is somebody who open a position in a year, within a year. You can start, for instance, now maybe you have noticed that Bitcoin is going to go up. You can open a position now and stay there for the next 2 years, 3 years. We have seen people who maintain a position for a long period of time. Then, are you a swing trader? Look at an opportunity. Okay, I just see an asset. An asset is at a low. Then you can now ride the swing. Just move it. Look at the stock. Look at S&P 500. Look at where it is. Look at what happened last week to it now. The market, So take advantage. And you get what I'm saying? You can ride it. So that your personality must fit into your trading lifestyle. Very important. Are you a day trader? A day trader is the one who opened a trade today and must close it that day. Latest by 4 p.m. or 5 p.m. or latest that day before the Asian session opens. So you open London session and then you close before the Asian session. So that's very important. So are you a scalper? A scalper is somebody who doesn't stay too long in the market. It goes in 5 minutes, is out, 15 minutes, is out, and is able to make his capital. So that is who a scalper is. So quickly to the subject, we have talked about how to compound your accounts in Forex. For example, let's say we want to compound $100 in 2 months or 3 months, whichever way. But let's start with 2 months. So our capital, like I said, you need capital. The capital now is $100. What is our profit? Our profit is to make 100% of our account within 2 months, within 3 months, so depending on the situation that you find yourself. So you must understand your risk. So risk per trade. So let's assume we are risking $10 on $100 accounts. What does that mean? That means if you are taking that risk, if the market does not go your direction and you lost 10 times, that means that account is wiped off. That is your risk. So, and also, if the market goes in your direction and you're able to make money, then you'll be able to multiply that account. So understand your risk per trade. Risk per trade is $10. Then profit per trade is $20. Why are we doing so? Our R to R, which is risk to reward ratio, is 1 to 2. That means I'm risking $10 to make $20. That is per day. That is per day because your account is small. So that's the target per day. So you are risking $10 to make $20. So what does that mean? So week 1 to week 4, the profit definitely is going to be $400. That is $100 per week. So that means, and we have 5 days in a week, isn't it? So if you make $20 today, Monday, Tuesday, Wednesday, Thursday, and Friday, and the market opens for 5 days. So that is $100. So you have been able to make 100% of your capital within the first week. So by the time you accumulate together in a month, that means you are already having $400. So add it to the capital, your initial capital. What do you have? 500. So you have made in the first month, you have been able to, at the end of the first month, would have $400 plus $100, which is $500. So your new capital now is $500 at the end of the first month. Can you see the magic now? So then the second month, your capital now is no longer $100. It is now what? $500. That is the capital for the second month now. And that's a good way to start with. So that means now that you're having good capital, what do? Increase your risk a little bit. Yeah, you can't stay on that same level. So now that you have good capital, you can increase your risk a little bit. So our risk to reward is still 1 to 2. And then our risk is $20 now. Initially, we were risking $10 when we were using $100. Now that we are using $500, so we are risking $20 per day. And then our profit now, our target now, profit is to make $50 per day. Initially, our profit was to make $20 per day. Now, because we have good capital, so we have raised it to $50 per day. So week 1, that means we're going to make $250 week 1. So week 1 to 4, that means we'll be able to generate $100, all things being equal. I mean $1,000, all things being equal. So at the end of the second month now, your capital will now be $1,500. Remember, you came in with 500 and you're able to make 1,000 more. So altogether will now be 1,500. So that's the magic, you see, and that is being consistent. For somebody who will say it's too small, and that's where a lot of people run into trouble. Start, be systematic. Like I said, that anything that does not have structure does not have future. So this is a structure that you can rely on to compound your money. So also note, like I always remember that the market always move. In fact, most time always move 20 pips. Well, somebody may be asking, what is a pip? A pip is a unit of measurement to express a change in value between two currencies. It's just like distance between two places. If currency 1 is moving from point A to another place, to point B, so that is a pip, that distance. And that's how currency moves. So, and it is measured in terms of pips. So now, on a micro lot size, we have 3 types of lot sizes. We have micro lot size, we have mini lot size, and then we have standard lot size. So for a micro lot size, 1 pip movement equals $0.1. So if Euro USD is able to move 1 pip, that means, and you are in a micro lot size, you are using micro lot, that means you are making $0.1. That's it. So if it's in a standard lot size or a mini lot size, if you are using mini lot size, that means you have made $1. And if you are in a standard, you are using standard lot size, you have made $10. You can imagine the market move 20 pips in a standard lot size. That is $200, and that 20 pips could be within 5 minutes, could be, it depends. That's how easy it is. And lot size, when we're talking about lot size, is the amount placed on trade or trading volume. So your lot size ranges from 0.01 to infinity, 1,000, 100, what have you. And it determines how much you're able to make from the market. So if you're using 0.01 and then 0.1, like I said, the difference will be in terms of monetary value. Somebody who's using 0.1, let's say the person is making 1 cent. Somebody using 0.1 will make $1. You can see now. Somebody who is using one will make $10. So you can see the difference now. So that's why you have to be then. The lot size is a function of your account. You don't just use lot size anyhow. You must be, because that determines your risk. So you must be able to know the size of your account in order to be able to do that. So, well, in conclusion, just to let you know that Forex is easy to understand if you're able to put proper risk management in place. You must be a disciplined trader. Plan your trade and then trade your plan. With this simple structure that I've been able to show you, I want to believe that you can make the most of the forex market just following this step by step approach. Don't be too greedy. Put plans in place. What are you looking at? Like I said, capital, very important. You want to increase your capital, you want to compound it, then okay, you must understand your risk. There will always be a risk. How much are you willing to risk in order to be able to achieve that objective? I want to believe that with this that has been said, somebody is already eager to take a bold step. And my encouragement or my advice is that you can take that bold step today just by making that decision to say, I want to start trading forex. It's simple. Trading currencies of nation, buy, sell, buy, sell. There's nothing difficult there, but people make it difficult because of greed and because they don't understand what it is. Thank you for listening. In case there are any questions, I will take it as time goes on. Thank you.
Awesome, awesome. Can I ask one question, sir?
Okay.
Okay. When you started Forex, what was one major mistake that you made that you would encourage anyone going into it to be careful not to make the same mistake?
Yeah, there is nobody who doesn't make mistake in going to forex because, like I said, lack of knowledge is the reason. So I've made a lot of mistakes, and that is using big lot sizes on the small account. It's not advisable. And then lack of discipline. There are times when I trade, I would have made a lot of money from the trade, I will still leave it, and then I want to make more. So that means there is no plan in place. Lack of plan, discipline, they go together. So you must plan your trade. There are times I just wake up, I just jump and trade. But I don't do that now. I plan everything. The structure is there. I plan everything. So the structure is there. You understand? So it's easy for me now. So unlike when I started, everybody always make that mistake. And the truth of the matter is, it is the mistake you'll be able to that will give you that experience in life. Today I'm a profitable trader because I've made a lot of mistakes. Yeah, it's not easy to make money from forex. Yeah, a lot of people wonder why I'm able to do it. So, like I said, you have to admit your mistake. There are mistakes, but the earlier the better, and also recognize when you make mistake. Yeah.
Second question.
Okay.
Is it possible for someone to create sustainable income that they can use to take care of their family from Forex? Because most people see Forex as a side hustle. But is it possible for you to make your major income from Forex trading?
Yeah, well, like I said, Forex today is the largest market in the whole world, the largest financial market in the whole world. And that is what the billionaires are using. That's where government comes in. So most of the money you get from Forex, you can't get it anywhere. That's why I say government, CBN, that's what they do. So it's easy for them to make such money. They come with trillions. Within, you can imagine a bank coming in within 30 minutes, they have made trillions of dollars, 30 minutes. Where do you want to get such money in life? It's not possible. So it's only in Forex you can get that. It's possible in Forex, but you must know how to do that. So the only thing I would advise anyone starting is this, because there are levels. You don't just make it your source of income as a starter. Make it a side hustle. You know, look for 9 to 6, be growing. You know, and then let me use myself as an example. When I started, I didn't understand it. You know, I was making some losses, but I was sincere with myself. If people are making money from this thing, then I should be able to make money also as well. So I started developing myself. What do I need? You know, what do I need to do? So I started doing research, and then 1 year, 2 years, 3 years, and before I knew it, I became profitable. Now today, Forex takes care of my luxury lifestyle When I made luxury, you want to buy car, no matter the amount. I want to build house, no matter the amount. Forex does that for me. I don't work, I don't use salary to build house. Forex does that. So you can imagine the level of what Forex can do now. But I started gradually. So I always tell people now, if until you are profitable with it, never leave your 9 to 5. You will know when you're profitable. If I'm not profitable, I will focus on other things. So that's it.
Awesome. Last question. What motivates you to share this information and knowledge you have about Forex and trading? Because most people, if they found a way to create wealth for themselves, they hold it to themselves. They don't want anyone to know. But what has given you the passion to want to share this information to other people for free?
Very important because I've been duped. So, and I don't want people to make that mistake. And I always tell people, even though you are not going to do it because of your children, have the knowledge. Even though you are not going to trade it, that's not an issue. But have this understanding so that when somebody is talking to you, hey, I did Forex. Relax. You didn't do Forex. I know Forex. Because I've been scammed. And a lot of people have been scammed like that. So, the passion, so I don't like when people have been scammed and when people lose money. It touch your hard-earned money. I don't like it. So I offer myself to counsel people, especially Israel in Christendom. We shy away from such things. So that we say it's only we pray, we fast. Yeah. No, we have to be aware of what goes on in the economics. I have to be able to interpret it. Now, today nobody can deceive me. No matter who you are, you can't tell me plus one. In fact, there was a time somebody said, "Oh, there is still this investment that is given. When you bring $1,000, they give you 10,000." I said, I said, that should be a scam. He said, "No, it's real." Do you know that the person called me 2 months after, sir? Your advice was, I said, I told you it's not possible. If it's Forex now, I said, show me the platform, I will tell you it's Forex. Why I said Forex can give such money? Because there's what we call lot size, and depending on your capital. So if you have, like most banks now, they have the capital. Government have such capital to go in. So if they go in with $1 trillion, they can come with $10 trillion. That's the big capital that give them that leverage. Do you understand what I'm saying? So it's not that you just go in like that, and these people, they know, they have a lot of information.
Yeah, they have analysis methods.
Donald Trump now, look at Donald Trump now, what he's doing in the forex market. He has a lot of information. That's why the whole world is shaking everybody like that with a lot of information. Everything he says now, move market. Because he's a businessman. You understand? He's a forex trader. So he knows the in and out. He will say something now and cause Iran, and there will be war, and so oil price will go down. They go in. So that is it. You have to be aware of these things are real. There's nothing mystic about it. It's real.
All right. Thank you very much, sir. God bless you. Yeah. Have a lovely day.